Hi Queens, Sam here. I hope that you're doing good. Today we're going to be talking about being a hands-on investor or hands-off investor. If you remember, I did share a little while ago my investment process, high level. One thing that I think is really important for you to determine when you're actually talking about your investment process is to really determine if you are a hands-on investor or a hands-off investor, because that will help you to structure your investment portfolio. And as I'm going through the specificities of each type of investor, I'm going to be using examples uh, from like real estate investment or equity market. So let's start with the hands-on investor. When we're talking about a hands-on investor, it's usually someone who wants to take an active part into monitoring their investment portfolio. When we go for a real estate investment, an example could be of an active investor, so a hands-on investor could be buying a piece of property, a house that they actually rent to long-term tenants, and they are the one in contact with the tenants. So whenever there is an issue, the tenant will be the one contacting them. They will be the one taking care of anything that needs to be fixed in the house. They may do it themselves, they may hire someone to do it, but they will be the point of contact for the tenant. Same thing if the tenant leaves and they need to get new tenant, they'll be the one conducting the whole search, selecting new tenant, signing contract, and putting the new tenant into the house. So they really have an active part and they manage actively that piece of property. So it's for you to determine if really the cost that you're going to be saving by doing that is worth the time that you're going to be putting into it, because definitely it's going to be taking a good chunk of your time. And it may be something that it's easy to do if you own 2 or 3 properties in the same city, because you can easily go from one property to the other. However, if you intend to grow your portfolio and own properties outside of the city you're living, and essentially, or maybe even within the city you're living in, but it's going to be like 30, 40, 50 properties, then it becomes a bit difficult for you to manage it on your own and you might need some help. So being an hands-on investor when it comes to real estate investment, it could be easy when it's a few properties. However, when your portfolio becomes a bit bigger, that might be something that you actually want to look into. When we're talking about the equity market, for a hands-on investor, usually those will be people who will go for stock picking. So they will select the companies that they want and they think that those companies will perform well and buy the stocks from those companies. Being an hands-on investor will require you to be aware of what's going on in the industry for that company, of the company itself, their management, their products and services. You have to read probably their quarterly statement, their annual statement, attend to the annual general meetings. It does require time, and it really requires you also to be knowledgeable about the environment that the company is actually operating in. And so it's something to take in consideration, because it's also time that you're going to be putting into it. And as we know, we also have other things in life. And so being a hands-on investor for the equity market usually will come from people who really have a deep interest in the companies that they're actually selecting, and are really comfortable taking the time to read about those companies and search and really putting the time into it. Now, if that's not something that you're interested in, the alternative is for you to actually be a hands-off investor. So a hands-off investor will be someone definitely who's interested to have an investment portfolio, but not so much interested in putting so much time in monitoring it. And there are different ways that you can do that. When we take the equity market, it could be that you want to work with a financial advisor. So the financial advisor is really the one monitoring your portfolio for you. I always suggest to people, even if you have a financial advisor, don't delegate everything to them. Don't let them manage your hard-earned money without you knowing what you have in your portfolio and why you're owning certain certain instruments. So it's really important to still have a visibility of what you have in your portfolio, and don't hesitate to ask questions to your financial advisor if there's anything that you don't understand. So that's one way to be a hands-off investor when it comes to investing in the equity market. The other way is, instead of stock picking, you can decide to buy mutual funds or like exchange traded funds or ETFs. And those are, instead of being like stock of one specific companies, they a share, you buy a share of pooled companies. So it could be, it's good for diversification, right? Because usually it's diversified across industries, across geographical areas. So it really helps you with the level of risk that you actually have in your investment portfolio. And at the same time, you don't have to be reading that much about the companies, because usually you may have 500, 600 or 1,000 companies in the pool of the ETF. So essentially it's a way for you to participate in the market but not having a direct risk of being exposed to one specific company. So that's one way also to be like a hands-off investor when it's the equity market. When it comes to the real estate investment, a way for you to be a hands-off investor could be, you still go ahead and buy those properties. However, you hire a property management company or someone who becomes your property manager. Granted, it comes at a cost because you have to pay those people for the work that they're going to be doing. However, it's something for you to take in consideration in your cash flow calculation and still make sure that it is a sound investment, even if you were to pay them a certain percentage of the rent to be the one managing the property. So you have that property management company as the first filter between you and the tenant. They will take care of most of the requests coming from the tenant, but there might be stuff that they will need to come to you and ask and validate just to make sure that you're okay with it before they make the decision. So that's one way that you can be like a hands-off investor when it comes to real estate investment. The other way is that you can participate in real estate investment trust, which I guess is a hybrid between real estate investment and also equity market, because they trade on the stock on the market and the equity market, but it's pooled. It's a real estate investment that are pulled together. So that's another way as well that you can be a hands-off investor. So you need to take that time, especially when it comes to determining your investment or what type of investor you are, to really take that time and be honest with yourself and really determine how you want to put in place and monitor your investment portfolio. I have to say for myself, when you look at my portfolio, you probably think that I'm a mix of both. And that's because I really started more as a stock picker, where I was focusing on buying stocks from specific companies. However, when I got to know more about the ETFs, I started slowly shifting my stocks, my company stocks, to ETFs. This year I took a pause in doing that because the markets are not doing that great, and I decided that I will not be making that many changes this year. I'll just wait for the market to come back a little bit, then I'll probably continue doing that. I'm still very comfortable with the companies that I own, that I actually own in my portfolio. However, because I actually own those companies, I need to be aware of what's going on with them, their industries, and just making sure when they have any announcement to read them and try to figure out what will be the impact on their shares. Luckily, I have to say that the majority of them, I find them as sound companies that I do believe will still be around 100 years from now. So that's good news for me. However, nobody knows the future, so I may think that, but who knows the future really? So anything and everything can happen, and I feel like being able to switch those from my investments from stocks to ETFs will really help me making sure that the risk level is reduced, and also that shocks in the market don't impact that much the value of my portfolio. So that's that. And so I'm curious to know from your perspective if you think or if you know that you're more of a hands-on investor or hands-off investor, or again a mix of both depending on the case. Let me know in the comments below. Don't forget to like and share this video. Also hit the notification bell and subscribe to the channel for the next video that I'll be sharing. And again, thank you for watching and keep on building wealth.